welcome to my Homebuyer Seminar. My name is Corinne Edgington, and I'm a real estate consultant with Bellevue Real Estate in Woodland, California. The purpose of this seminar is for me to share with you my real estate knowledge and to help you make an informed decision when considering buying a home. This seminar will go over the 8 steps to buying a home and will help you prepare for one of the largest financial and emotional decisions in your life. Whether you're thinking about purchasing in the next year or the next month, this information will help prepare you to make sound decisions. Let's get started. In this Homebuyer Seminar, we're going to go over the 8 steps to buying a home. Those steps include looking at the pros and cons of owning a home, finding a mortgage lender, finding a real estate consultant, determining your needs, the process of previewing homes, the process of writing an offer and negotiating terms, the process of going into escrow and what escrow is, and close of escrow and the move into your new home. In step 1, we're going to look at the pros and cons of owning a home. Starting out with the pros, the first is scheduled savings. And what I mean by that is that when you're a homeowner, your monthly mortgage payments serve more or less as a type of savings plan. Over time, you're able to accumulate what we call equity, which is an ownership interest in your house that could potentially allow you to be able to borrow against at a later date or to convert into cash when you sell that property. Also, stable housing costs. When you purchase, typically your monthly mortgage payment is going to include your principal and interest. And in our current market, a fixed rate mortgage loan is a typical loan that most home buyers get. So your principal and interest is going to remain the same every month through the life of the loan. When you rent, there's a good chance that year after year, your rent is going to continually increase. Also, another pro of buying is increased value in your home. We typically see increases in value over time, and it's not unusual that a house sold 15 years ago will be valued much higher now than it was when purchased. The last benefit that I have on here is tax benefits. As a homeowner, you're eligible for significant tax advantages that are not available for renters. Most importantly, the interest paid on your home mortgage is usually tax deductible. Therefore, you're able to save a substantial amount each year in federal income taxes. Of course, with that being said, I always recommend that if you are looking to purchase and you want to have more information on the tax benefits, please contact your tax preparer or a CPA, as they will be up to date on all tax benefits and also know if anything will be changing in the near future. Now, with the pros do come the cons, and some of those drawbacks include high cost. Typically, you can expect to pay more for housing as a homeowner than you did as a renter, and that's, especially in the first few years. Even if your mortgage payment is less than your previous rent payment, you do also have to take into consideration property taxes, homeowners insurance, potentially flood insurance if you're in a flood zone, utilities, and of course upkeep expenses. Another thing to think about is your decreased mobility. For some people, it may make more sense for them to continue to rent. As a homeowner, you cannot move as easily as a renter just because you're tied to that property. If you anticipate that you're going to be moving to a new location within the next year or two, buying right now may not be the best option for you. And that's always something to have good conversation with your real estate consultant when thinking about that and deciding if renting or buying is a better option. Also, repair and maintenance. It's when you rent, you get to call the landlord to come fix the dishwasher or the water heater. But when you're a homeowner, it's up to you to be responsible for the repair and maintenance of that home. And lastly, something that we've seen, unfortunately, in the somewhat recent housing market is possibility of foreclosure. This one going forward isn't something that all homeowners need to be concerned about, but it's definitely important to know that you are responsible for making your monthly mortgage payments. And if you don't make those on time, there is a possibility of that lender going into foreclosure on your property. I'm also going to go over things not to do before purchasing a home. First of which is don't buy a car or make any major purchases. When I say that, what I mean is if you were to finance, let's say, a new vehicle, you're looking at an estimated monthly payment of, anywhere from $200 to $400 as an estimate. What that payment will do is it will affect your debt to income ratio and affect your ability to qualify for a mortgage. Also, any new debt that is reported on your credit report, the shorter term of the shorter the rating term is on that debt, the more likely it will negatively affect your credit score. So if you're finding that that's a necessity at this point in time, I would definitely consult with a lender to make sure that you're not potentially affecting your ability to qualify for a mortgage. Also, don't open any new credit cards or make charges to existing credit cards unless, I'll put this caveat in there, unless a lender has advised you to do so. And again, that is to keep from negatively affecting your credit score. Opening new credit, again, if it has a shorter term of rating, there's a good chance it will negatively affect your credit score. Also, when you close credit cards, that can potentially hurt your credit score. The more open, unused credit that you have, typically that will help your credit score. Also, don't move money around. This is really important because when you do go through the process of getting a mortgage loan, and an underwriter is having to review your assets, whether it's for your down payment, your earnest money, or your funds to close for other fees. If they see that money is being moved from one account to another, you're going to have to provide a paper trail for all of that movement. Also, I'll mention in this too, say for instance, you've decided that you're going to sell your car as a way to have cash for a down payment. What you want to make sure is that you have a bill of sale and a way to paper trail the sale of that vehicle, because the underwriter will want to see that as well. They'll want you to be able to source any what we call large deposits into your bank accounts. Lastly, should you change jobs? This one, it really depends. If you are changing jobs for the better, you are getting a promotion, you have an increase in pay, most likely that won't hurt your ability to qualify. Now, if let's say that you went from a full-time salaried position to a part-time position, there's a good chance that that's going to hurt your ability to qualify for a mortgage loan. In step 2, we're going to go over finding a mortgage lender. And I think that it's really important to ask these 5 questions of your lender before you sign anything. That first question is, do you have a variety of loan programs to fit my cash flow and expected length of ownership needs? And what this means is there are many different lenders that are approved with many different loan programs. We hear in the media you've got conventional, FHA, VA, but there are extended loan programs that some lenders can provide. Some of them have what they call portfolio products, which have a little bit more lenient underwriting guidelines. So that's definitely a conversation to have with a lender when you're first meeting with them. Also, do you offer pre-approvals and not just pre-qualifications? And that is something that we will go over next, going over the difference between the two. Third question would be, do you have the ability to handle difficult credit history? And really, a lender should have the experience handling a difficult credit history and being able to work through it, and to also be honest and upfront with you if you do have a difficult credit history, letting you know really what to expect. If there's a specific timeline that they think it's going to take to repair your credit before you qualify for a loan, they should be able to advise you on that. It's also really important for a lender to have business relationships with credit repair companies. If they can refer you to a credit repair company, a reputable credit repair company at that, then that's also really important as well. The fourth question is the rate that you quoted me the rate that I will get at closing? And that is definitely a very important question. Right now, we have been in a fairly volatile market. We've seen interest rates drop very low. There has been much talk about them going back up. So it's always really important to understand the interest rate that the lender is quoting you, what it means once you've locked in an interest rate, and also have them explain to you the difference between an interest rate and your APR rate. There is a difference between the two of those. The last question would be, can you give me a list of your last 5 clients as references with their phone numbers? This really is the most important. If a lender is not referable, if they haven't followed through for their previous clients, then they're probably not a lender that you want to work with. So as uncomfortable as it may be to ask for those 5 clients and their phone numbers and make those phone calls, it will definitely make that a smoother decision for you when you're deciding what lender you want to go through. We're now going to go over lender pre-qualified versus pre-approved. And you'll definitely hear both of these terms used in reference to buyers. Some buyers are pre-qualified and some are pre-approved. And the difference is pretty simple. So for pre-approval, this is a much more involved process. You will end up submitting all income, credit, and asset documentation to your lender prior to you finding a home. Once you've found that home, though, really the only requirement that's left is the appraisal and then final review of the loan documents once you've signed those at escrow. The process of getting pre-qualified is a much more simple process. This typically includes just some general information such as your name, social security number, address, place of employment, and then your credit report. This process requires more information at a later date, which means that your approval is subject to that additional information. The pre-qualified process definitely allows for more hiccups down the loan process. So I always recommend getting pre-approved. It provides you a powerful tool when getting your offer accepted once you've found a house. Definitely more powerful than if you're just pre-qualified. The last part in step 2 is local lenders versus out-of-area internet lenders. You definitely want to consider when choosing a lender where they are from. And really there's 2 reasons for choosing a local lender over a out-of-area or internet lender. Out-of-area and internet lenders tend to be less accountable to both you as a buyer as well as realtors. And really, when they're not having face-to-face conversations and actually meeting you in person, they just tend to not be as reliable. They're also less likely to advocate for their clients if the file has any turbulence. Again, same idea. When you meet face-to-face with a person, that typically changes a relationship, your working relationship and how they're going to advocate for you. Using a local lender, they're definitely more accountable to buyers and realtors. And more often than not, realtors already have pre-existing relationships with these lenders. They know how they work. They know what they've done, how they've gone above and beyond to make previous deals work. So typically, if your real estate agent is recommending that you use a specific lender, it's worth looking into that. Of course, as a buyer, it's always your option and your choice of what lender you want to use. Don't ever feel backed into a corner by your real estate consultant because really it is your decision to make. Also, with a local lender, typically pre-approvals hold more value when you're submitting an offer. And again, what that means is that when the listing agent receives your offer and they know who that local lender is. They know that lender is going to get the transaction done and be there if there is any turbulence. In step 3, we're going to go over finding a real estate consultant. Your real estate agent should be a full-time, hardworking professional. And what I mean by that is being a real estate agent should be that agent's full-time job. It shouldn't be their secondary profession. It makes sure that they have the ability to invest the time and the knowledge into making sure that they're helping you make the best decision for yourself. They should also be aware of market conditions and available financing. Those are two items in the real estate industry that are ever changing, and it's very important for a real estate consultant to be on top of those changes. They should also be backed by professional marketing management, and really this is something that it more or less affects a seller, but when you're looking to purchase a home, usually most people think that there's a good chance that they'll end up selling in the future. And if you're trying to find a real estate consultant that you can have a great relationship with and rely on when you go to sell your home, you definitely want to think about what their marketing plan looks like, and make sure that it's a good fit if you were to ever decide to sell your home. That agent should also be associated with a reputable real estate firm. They should be willing to cooperate with all brokers. This is very important to make sure that your offer isn't unfairly looked at because your broker has a outstanding, not a very good relationship with the listing agent. Your agent should be committed to the highest ethical standards. They should be associated with a strong team of lenders, inspection companies, title companies, and other real estate professionals. And lastly, they should be open and an honest communicator with problem-solving skills. As most people know, even if you haven't gone through real estate transactions, putting an offer in on a home can sometimes be a very turbulent experience, and it's really important that you have an agent who is able to work through those problems, be able to communicate those problems to you, and also have solutions in mind. In step 4, we're going to go over determining needs versus wants. It's really important to distinguish between the two before heading out and going house hunting. The perfect home satisfying all of your needs and all of your wants will most likely not be there. The process of finding the perfect home is more like finding the closest to the perfect home. Before you ever step out the door for your first time, make a list of your needs and a list of your wants. An example of this would be John and Liz have 3 kids, a dog, and a mother-in-law. They need 4 bedrooms, a decent-sized backyard, and 1 bedroom and 1 bathroom downstairs. Their wants are 5 bedrooms, a pool, and granite countertops. This form is a great resource for anyone starting out the home buying process. This will help you determine your needs versus your wants, and is a great way if you are purchasing with a family member or a spouse or anyone else. It's a great way to be able to compare and contrast to make sure that everyone's needs and wants match up and are being addressed in your home search. In step 5, we're going to go over the process of previewing homes. In my experience, it's important for every homeowner to know these before they start the house hunting process. First, it's really important as a home buyer to get set up on an automatic email program with your real estate consultant. This will give you access to new listings as early as they are available to agents, and it also ensures that you're getting accurate information. This is in comparison to using your average consumer website. Also, it's really important on the day of previewing homes that you limit the number of homes you see to no more than 5. And really this is to ensure that they all don't start looking the same. Once you've seen more than 5, it's really hard to remember the details and to be able to decipher which ones really stood out and had the qualities and characteristics that you wanted. Also, it's very important to take notes at each home and even ask if it's okay with the homeowners for you to take pictures as well. And nowadays, with our new technology, it's always great to have your smartphone next to you snapping pictures. It's a great way to remember some of the details of a home, especially if the photos that are available online with the listing don't show some characteristics that you maybe want to remember. In step 6, we're going to go over the process of writing an offer and negotiating. Before you decide to write an offer, you want to think about the following. The first is writing a deposit check, also known as your earnest money deposit, to get the offer accepted. Earnest money deposits typically range from $1,000 to 3% of the purchase price. Of course, when you're writing an offer, the amount is something that your real estate consultant will advise you on. The deposit check will not be cashed until it's given to the title company after your offer has been accepted. From there, you have 3 days after acceptance to deliver it to the title company. And that's something that your real estate consultant will help facilitate for you as well. Also, something to have in mind when you're getting ready to write an offer is your desired close of escrow date. You'll need to request this date in the offer, and you want to make sure that you're going to be available about 5 days prior to that date to be able to sign your final loan documents. So if you're going on vacation, if you have a conflict, that's definitely something to take into consideration when deciding that date. Also, something to take into consideration is that all parties to the contract will need to sign the offer. Luckily, in this current age, we have the ability to do electronic signature. So once an offer is written by the agent, it can be sent to all parties to get electronic signature as well as live signature. The second part of step 6 is the process of negotiating. And negotiating is when the sellers will either accept your offer or write a counteroffer, which then changes specific things about the offer that you originally wrote. At that point, you'll have the choice to accept the seller's counteroffer, or you can write a counteroffer to their counteroffer. This process can sometimes get lengthy, but the goal is to settle where all parties feel comfortable. In my experience, the best advice that I can offer during this negotiation period is to have the mindset to be fair and reasonable and some give and take. Setting this tone for the transaction begins during the negotiation phase, and it sets you up to have a much more smooth transaction. In step 7, we're going to go over escrow and inspections. What is escrow? Really, escrow is a time period from the acceptance of the offer to the closing of escrow and the transfer of the property. During this time, the escrow company becomes involved in the transaction, and really the escrow company has two main functions. First of which is when they act as a neutral third party holding all monies, documents, and etc. related to the transaction. They also make sure that all parties, that includes your buyer, seller, lender, and realtor, make sure that they fulfill all of the conditions of the contract. Once this is done, they transfer the property from one party to the other. The second function of escrow is that they search the title on the property involved to make sure that it is clear and able to be transferred. They make sure that there are no liens against the property and that need to be paid off before it can be transferred, and if there are liens, they facilitate the payment of them. It's really important that the title of property be clear so that the new owners do not become responsible for liens attached to the new property. The title company researches the title and then furnishes a title policy that ensures a clear title. And what that means when it ensures a clear title is that, say for instance, they miss something. You're insured against that. That way you're not held responsible for that lien once it's been transferred into your name from the previous owner. The second part of step 7 is the inspections. And here I've listed numerous different inspections that you can get on a property. And these inspections are to be done within the first 17 days of your escrow period. As a real estate consultant, I always advise that my buyers use this period to get inspections done, do investigations, and make sure that the home that they're buying doesn't have any issues that may potentially arise once the transaction has closed. The first of which is a whole house inspection, and really this is the most thorough inspection that you can get and probably one of the best that you can invest in. The whole house inspection, the home inspector will check structural condition, the foundation, electrical systems, plumbing, appliances, the heat and air system, and much more. Again, it's very thorough. It is a little bit more costly. This inspection can run you anywhere from $325 up to $450 depending on the size of the home. But again, a highly recommended inspection to get done before your inspection period is up after the 17 days. I also recommend getting a pest inspection. This is going to see if there's any wood destroying pests in the home, if there is any dry rot on the home. It's a great investigation to make sure that there aren't any major structural issues as well. Also, some of the other inspections in here, not necessarily as common as the whole house and the pest, but definitely ones to consider depending on the property that you're looking at purchasing. Those include a roof inspection, heat and air conditioning, solar, fireplace and chimney, pool, environmental, well, and septic. Again, sometimes the sellers choose to get these inspections done prior to putting the home on the market. Any inspections that a seller has done, by law, they are required to provide you with those inspections. With that being said, even if a seller has done an inspection or had an inspection done on their home, I always recommend that my buyer get a second inspection just to make sure that nothing was missed and that there's no bias since the inspection was ordered by the seller. We've made it to the last step in our seminar, and that's step 8, the closing process. In the last week of the escrow process, before your closing date, the activity will start to pick up again. Your real estate consultant will be coordinating with the lender as to when your title company will receive your loan documents, or also known as docs. Your real estate consultant will also help facilitate and schedule the appointment with your escrow officer for you to come in and sign those docs. This typically occurs between 3 and 5 days prior to your close of escrow. Just a reminder that when you go to the title company to sign your docs, you want to bring your California or state-specific driver's license or another valid photo ID. And of course, as always, your patience, because there is a lot of signing involved. Also, 5 days prior to the close of escrow, you will be entitled to do what's called a final inspection. Typically, your real estate consultant will schedule this for the same day that you do your doc signing. Now, this final inspection, the purpose of this is to go through to make sure that the property condition has been maintained from the first time that you saw the home through your final inspection. This isn't a time to go through and pick out new things that you find, for lack of a better term, wrong or not up to par with the property. Lastly, after you've signed the docs, your escrow officer will send them back to the lender for final review. Once they're reviewed and signed off, the lender will fund the loan and title will transfer the property to your name on the scheduled close of escrow date, or sometimes you may even be able to close earlier if both you, the buyer, and the seller agree on a date. Thank you so much for taking the time to watch my Homebuyer Seminar. If you have any questions about buying or selling a home, or if you know of anyone that's getting ready to make a move, please don't hesitate to send me an email at corinne@bellavirealestate.com or call me at 530-908-4890. Thanks again.